guys, very good morning to all of you. Today I'm here with another session which is one of the most important topics in your curriculum, that is sources of finance. Now you all know it's a theoretical topic, and for most of you students, FM being a practical topic, you are very much or I must say least interested in theory. So to make it more interesting, I have brought to you today this topic with lot of practical touch. What do I mean to tell you by that? Lot of practical illustration along with the theory concepts. That is, I'm going to tell you, trust me on this, going to make this topic very easy for you. Because every time you think of that particular word, you will remember the examples I have quoted for you. So let's begin. Sources of finance. Now, as we previously discussed in the topic when we were doing it from the study mat, sources of finance for a business organization is very important. When it took birth, when the business just began, and then it started growing, and to run on a daily basis, they need a lot of funds, be it long-term funds, short-term funds, working capital. For everything, the sources of funds is very, very important. Today, I have brought to you in a nutshell and with a lot of practical case studies the total concept of sources of finance. While I'm taking you through a lot of these practical case studies, you will understand the concept of different meanings to it. So let's just jump into it as what are the different things we have. I have presented to you a cycle. I like to call this as the funding cycle. Now, what is this funding cycle? Now, the entire thing I am going to take you through basically from a startup's point of view. When a startup, when it gets conceptualized through an idea and then it grows. Yeah. So see, first is the idea stage. So when it is at the idea stage, what are the sources of finance available to a entrepreneur or to a person who is considered as the founder? And then as it grows, see, from idea, it grows into a seed or a prototype. We call it as a prototype state. Okay. And what are the different available source of finance? Don't worry, these might look alien to you or you might still be familiar with it, but by the end of this lecture you will know exactly what are these words and what I mean by them, right? Then of course from the seed stage it grows into an early growth stage. And what are the different options available from source of finance point of view? You have bank loans, you have government schemes, you have cash credits and everything. And next is the expansion stage, when there is a stage of rapid growth. And then of course the large scale production stage or a maturity state, what we call it. And then what are the different features which is available to us? Private equity, strategic investors, debt instruments, and obviously the maturity stage or the public stage that we call, finally what you've all heard, the IPO. The end cycle of the financial fund cycle is definitely going to be the IPO stage. Okay, maybe I'll come back to this chain all over again. You don't have to bother about it. But yes, let me now begin with what I have been, constantly telling you about, the practical case studies. The very first case study I bring before you is the case study of Chayos. I don't know whether you heard of this brand. It's a national brand currently. Okay, they were two IIT graduates. Okay, you can see the names of them on the screen, Nitin Saluja and Raghav Verma. They were freshly passed out of IIT graduates. Okay, they were thinking something like, after every college breaks or during their college session, bunk the class, go and enjoy the coffee experience in a Starbucks or a cafe coffee day. It was there for a coffee experience. But you all know in India, we are majority tea lovers. Okay, there is a large population in the country which enjoys tea. But they observe there is no such concept of enjoying such a tea experience. There is no Starbucks for tea, nor there is a cafe coffee day kind of a chai place, right? So that was exactly what they observed. And they then decided that why don't we start something like a Starbucks for a tea place, where people come and enjoy different flavors of tea. That was the idea that came to these two guys, and they were extremely passionate about pursuing this ahead. But let me tell you, getting an idea is totally different than getting a fund for that idea, right? It's commercially, how commercially is your idea viable is how strongly you are going to stay in the market, right? So yes, as we all know, their idea was to make tea customized to your taste. They wanted more of a ginger flavor or a elaichi flavor, tulsi flavor, masala flavor. So they wanted to bring tea in different forms before the tea enthusiasts. So, but yes, when you come to funding, that's where the question mark is. How do I get money for my idea? But yes, first they had to pump in their own money. So that's your stage number one. What is stage number one? Is you have to fund your own idea. So those two guys that I'm talking about, which is Nitin and Raghav, they were so passionate about that their idea that they put all their savings into it, and this is called as bootstrapping. Okay, remember this is a concept in your chapter as well. What is bootstrapping? When you fund your own idea, you have got an idea, you're so passionate about it, you want to start your own venture, you put in your own money, and that concept is called as bootstrapping, right? So that's the owner's own capital. So yes, they put in their own money and they began their first outlet in Gurgaon. Okay, of course, it was their own money and they were little tensed about it, as how is going to be the public response, how is the customer expectation, whether we'll be able to generate enough profits. All that is, so that's the common challenges. So like I said, profits were low in the beginning, but yes, they were it was a business which had no track record, right? Ultimately they were sure that they could do something in the end. Yes. So they were so passionate about this idea that they could get some experienced entrepreneurs, okay, and they pitched their idea before them, just like the Shark Tank, if you have seen that. Just like that, they went with their idea to some experienced entrepreneurs, and they found that this idea is having good potential. So then those angels, so they are called as angels. Angels are the people who invest in your idea. So angels generally come in the idea stage. Okay, so that's why we call them angels. They don't see your track record, nor they gauge your business experience. They see how good is your idea. Is your idea commercially viable? So there is some sense through which these angels come and invest. So they got a good angel funding, and because of that angel funding, they could expand the model. Okay, and then came the next chapter where they were able to successfully expand all across Delhi NCR. They had one store and now they have quite number of stores in the entire Delhi region. All right. One cafe, to start one cafe requires lakhs. But now they were planning to open 50 cafes. Now 50 cafes means they need large number of funds. So angel is a person who can fund your idea, but now is a stage where you want to grow to a bigger level. So from idea, you have reached a stage of growth, right? So in the growth stage comes venture capitalists or your venture capital firms. So these venture capital funds are sitting there to, fund your growth stage. Angels don't come in, they don't enter in the growth stage, they enter at the idea stage. Remember these, okay? And it is venture capitalists who will enter at the growth stage because they see whether there is a growing revenue, they see whether there is a good customer base, they see whether the model is scalable. And of course, India has a huge tea market. So they felt, yes, this model is good. We should definitely put our money into it. And that's how they could expand. Chayos is a brand. Now you can see even in Bangalore, they have expanded in not just, so they started as a small outlet in Gurgaon, then they expanded in Delhi, and now they are there as a national brand. See, they have built, so this is their chapter 6. With the help of VC funding, they have become now a national brand. They have invested, they have expanded their technology, they have their own delivery apps, they have invested good in marketing, they are there in all the major cities in India, and then they are a good brand now to be identified as a very good brand today. So let me just summarize what their journey has been. They began with an idea. That idea was, pumped in, or the idea got an encouragement by their own savings. And that's how they could have the first tea shop in Gurgaon. Then entered the angel investors. Because of the angel investors, they could launch 10 stores in entire the Delhi NCR region. Then came the venture capitalist who funded them well. So now they have 100 plus stores all over the country. So that's how Chayos grow into a big brand. And possibly, we don't know, they have still not gone to the maturity stage of IPO, which we are yet to see. Okay, this is a possible stage. They have not gone into it. Okay, another interesting case that I would like to discuss, as you already see on the screen, is about Nykaa. It's a very beautiful case, a very inspiring case, in fact. Okay, it's a story of one woman's dream. Okay, how she, at a not so conventional age, started her own business. Okay, so let's begin. She, in the year 2012, felt that there is a good online presence for every other product in the country, but women in India then could not think of buying a lipstick, perfume, or a skincare online. I'm talking about almost 15 years back story. So yes, most people will say, why will I buy a lipstick or a perfume or a skincare online? How can I trust these products? You should go back to that era and question the woman, because today it's such a normal for us. We get everything online, but imagine then they were not comfortable. They would walk into a local store, buy the lipstick shades, skincare products, everything they had to see and buy. That was the norm. So she wanted to change that. Who is the she I'm talking about? I'm talking about a woman, or an inspiring woman, called by name Falguni Nair. Okay, she is an invest. She had a successful career as an investment banker for nearly 20 years. At an age of 50, when most of the people are thinking of retirement plans, she actually resigned from her well settled job, and she decided to do something out of the box. And that out of the box was starting this brand called Nykaa. Okay, again, only people with passionate ideas take these kind of jumps in their career. So yes, she thought, why shouldn't I have an online beauty store like a Sephora, right? That's how to her idea about Nykaa came. Again, the first chapter is funding her own dream. That is, she had to fund her own dream. And like I told you in the previous case study as well, always when you fund your own dream, and that is nothing but the owner's capital, we call that stage as bootstrapping. Okay. She felt, or I thought this line to be very inspiring to all the people who want to start their own business. She said, if I don't believe in my own idea and invest money, why will any outsider invest? Right? And my own money is the cheapest source of finance. So she began with her own money, and that is again the terminology that we use in our material for that is bootstrapping. So the first point is definitely she started her own website. She started her own online beauty stores. Initial challenge, initial hiccups will be there. Like I told you, women were not comfortable then to buy cosmetics online. They were scared whether I will get original product or not, whether I get a cheap duplicate versions of it. So yes, many big brands did not want to tie up with her. So she did face a lot of initial hiccups, but she was very she was sure that she could make it in this line, and she focused only on the genuine products. She focused on customer trust, and finally her sales started growing. And then, of course, with the growth stage, her money is not enough. She needs now money. Now, where to go? Because she needed money for warehouses. She needed money for technology, marketing, a lot of things, hire people. So, yes, she can't invest her own money. Her business had become big. So then came then came the potential of private equity investors. So she directly went ahead with private equity investors, because Nykaa had already become little bigger by the time private investors started showing interest in her brand, and she sold some of her shares to the investors, to her private investors. And then she just did not stop with offline stores. Now definitely you can see a lot of physical stores that we have already opened up all across India. Okay, then came the big movement, that is by 2021, Nykaa had become India's largest beauty retailer. So today, yes, it is one of the largest beauty brand retailers that we have online. And so, to fund the big maturity in her business, the big requirement requires an initial public offer. So she went ahead into an IPO. And so now her IPO actually gave a very good investor interest. The turnout was very, very good. So, yes, today she is, present online, she's present offline with her physical stores all across India. She sells beauty, personal care, fashion products, and she's also listed Nykaa on the stock exchange. We can very, proudly say she, Falguni Nair, is India's most successful self-made business leaders. Okay. So, yes, a very inspiring story, especially for all the women. Never hesitate and do what you want to do with so much of passion in your mind. Yes. So, again, to summarize her journey as well, funding, yes, it started with a great idea. It always begins with your own saving. Like I told you, this concept is called as the bootstrapping. I keep repeating this because by now you should know what is bootstrapping, okay? Because this is there in your syllabus as well. Then, of course, she launched her Nykaa website. The business grew. She had private investors in the form of equity funding. And then she had a IPO. Okay, now it's a listed company. Some question might come to your mind why she didn't go for a bank loan. Let me tell you, if there is no proper proven business model, if there is no proper cash flows, they don't have good documentation on papers, the bankers will never be ready to lend you money. So that is one of the reasons why we have angel investors, we have venture capitalists who are ready to take that risk, whereas bankers, they don't take such risk in the market. Right. Okay. Yes, just a small, example sort of. Building a Nykaa is like building a house. Foundation you build with your own money. Ground floor come in the investors, right? First floor, of course, is business expansion, that is in the form of private equity. The top floor was built using IPO. Just like to understand. Yes, now I have some case studies further to make your understanding much more better in this concept, that is the startup funding concept. Okay, now let's have one case study before me, that is, imagine Ananya makes amazing millet cuisines. Okay, now she wants to build a very good millet cafe. Again, every stage of her business needs a different source of finance. Obvious, we've already seen this. Idea needs it. Prototype is your seed stage. That is nothing but setting up a small shop. And then slowly you grow into 5 branch, then 100 branch, then you become a national brand altogether. Now, at each stage, you will have a fund requirement. So, let's see my own dream of having, or Ananya's dream to have a millet cafe. So, she needed to fund it through 2 lakhs. So, she put her own money, her own savings, her own jewelry, asking money from family, friends. So, she started her own business. Okay. Then, do you think a bank like an SBI or any other bank would give her 2 lakh rupees just because she has an idea? Obviously not. I love this line, okay? Bank finances businesses. They don't finance dreams. So I go passionately talk about my dream to a banker. He will say, please, Ogama, he will not listen to us. So therefore, we cannot take loans or finance from banks for our ideas. We have to look for angels around us, right? So yes, so she began testing the business with her own money, and then she opened one store. Now she's seeing the customer response, customers are coming, and you have your idea being little successful, and then you attract. So when you see suddenly your business is doing little well, that's a stage where you attract an investor, angel investor. I told you this. So angel funds you, say 10 lakh rupees, but they fund you, but they don't ask you anything in return. The only thing they ask is the ownership of your own business. So you have to give away your own 20% of that business to your angel. Angel investors are generally who buy your own piece of piece of future. Okay. So yes, now with this, Ananya started growing. Her business suddenly started doing really well. Now she wanted to open another 5 outlets. She needed more money. She had one outlet. She was doing really well, but now she wants 5 more outlets. Now is the time she can go to a bank. You see, every stage is a stage at which you can approach a different kind of person who will lend you money. Now is a stage I can go to a banker because now I have a proven business model in front of me. I can show them my figures, how well I'm doing, what's the sales I'm generating. I can show them my cash flow statement. So many things, so many documents I can generate now. Now the bankers will become interested. Okay, because like I said, there are sales, there are customers, people will be, there is profit. So I can either take a term loan, I can take a cash credit, I can take a working capital. Remember, term loan is for my long term requirements. Okay, cash credits are mostly for my working capital. Cash credit and working capital loan are for my working capital requirements. Right? Okay. Bank says we lend you money, you pay interest, business remains yours. So yes, that's one of the advantage of bank is they will not become the owners of your own business. They only want interest from you. Okay, so that's the difference. Yes, now with bank, I could expand to 5 stores, but I want a bigger future. I, as in Ananya, is looking for a bigger future. She wants more expansion. Now, with the same result, financial result, if I go to a banker, he will not give me money. So, what is the next option available? Is venture capital fund. So, I go to a venture capital fund because now I am in need of 5 crore rupees. So, 5 crore rupees with already proven business model. He already sees I'm generating good cash flow, I'm generating good profit. So yes, they'll agree and say, okay, let's give you 5 crores. But now they want 30% ownership. You see the difference? Banker takes interest, but VC angel investors take away the ownership, right? So that's what I said. The difference is angel investors invest in our ideas, whereas venture capitalists invest in the growth of the business. Okay. Right. Then comes a stage where now I'm already in one, city doing really very well. Now I want to expand further. What are my options? I can either take an option of private equity, I can take an option of debenture, I can take an option of corporate loan, so whatever. I choose private equity, okay? Because this is generally an option which most of the companies resort before going to an IPO. What's an IPO and what is a public equity? Or private equity, sorry. See, in IPO, I am giving my shares to the general public. In private equity, I know for like 5 people, and I go and give them the same equity shares to them privately. For example, I have some 5 FIIs, financial institutions, to whom I go give my equity shares and they're ready to fund me. So that's private equity. This private equity is a step generally taken prior to an IPO. Okay, they don't want to go to a large scale IPO because you raise a lot of money, but to do an IPO, it costs a lot to you as a company as well. So therefore, generally they resort to a smaller version of IPO, which is the private equity or private placement also we call it. Okay, so yes, that is one step prior to that. And then finally, if I need 1,000 crores of rupees, so that the best way for me to generate that money is to list myself in the stock market, become a public company, and go ahead with an IPO. Right? Money comes to the company, and now who are the owners of the company? It is definitely lakhs of shareholders now become the owners of the company. So let me just summarize to you this complete financial journey that I shared with you right now. Idea stage, I put in my own 2 lakh rupees, I or Ananya, same. At a prototype stage, came in the angel investor, gave us 10 lakh rupees, right? At a growth stage, I went to bank, bought 50 lakhs. Now I am planning to expand. So I wanted 5 crore rupees. I went to a venture capitalist. Now I want to grow even bigger, large scale expansion. So I went to a private equity, took 100 crores. Now I want to grow massive. I want to be present internationally. So now I have listed my company in the stock market to raise money through IPO. So you're understanding the different stage of growth and how we need money and what are the options available for me. Yes, this is how we have to remember. So this is a easy trick, memory trick to remember me, mom, angel, bank, VC, PE, public. Me is I as in my own savings, mom as in family and friends, angel, angel investors, bank is your debt, VC is the venture capital, private equity, and finally IPO. Okay, quickly to take you through some of the very good Indian examples which will make it more relatable to you. We have Zerodha. Okay, you know Zerodha. It is a bootstrapped company. Bootstrap as in even today at whatever stage they are in, they are self-financed. They have not taken money from any outside entities or there are no external funding. It's all internal. Flipkart, I'm anyway going to talk about them in detail. So I'll talk to you. They are at a stage of venture capital. Okay. So I'll tell you, don't worry. Ola is in a combination of venture capital and private equity. So look at their state. It's in growth state. Ola is in expansion stage. Zomato has already done an IPO, if you know. So it's already gone to the public funding stage. Nika, we know it was initially bootstrapped, but later it jumped to IPO in the multiple stages. Raising finance for a company is like raising a child, right? Okay. Now I want to take you through some of very good practical examples over here. One second. Case study 1. Okay. Yes, so I wanted to start from the Flipkart case study. Yes, so Flipkart also started originally with the founders' savings, like we call it as the bootstrapped stage. Then it went into, like most of the startups, the chain is very similar. Angel investors, venture capital, they went into private equity. Now they have very recently been Walmart acquisition has happened. So remember, startups, they don't survive using debt. They have to go with these options. That's why you see the pattern repeating. It has to be in your own funds, then has some angel has to come, then they go to either bank or not, depending on, it's totally their choice. Otherwise from angels they move to venture capitalist, private equity, and then they go into an IPO. That's a normal chain of funding, mainly because with the debt they can't survive. If they have to fly, if they have to grow, they have to go in this particular cycle model itself. Coming to Zerodha, they have not, or they have never resorted to, at least till now they have never resorted to outsiders funding. They have been funded using the owner's capital itself. So that's why we call them bootstrapped or through their own money. Next definitely is Swiggy. Again, similar to all the other in the startups that we discuss, stage 1, 2 founders started with their own money, then angel investors pumped in, then came venture capitalists, then came soft bank investment. I told you this is a stage where private equity is given to financial institutions. Yes, this is that stage. And then very recently in the year 2024 they went into an IPO. Right? Why not a bank loan? If you ask that question, I told you bank likes only certainty. Whereas VC, venture capitalists, they like possibility. So that is the reason why these startups don't go to bank, they go to venture capitalist. Of course. Now coming to Reliance Industries Limited, just a case scenario, okay, just to give you a more idea. Now Reliance is not a startup. It's a well placed brand. Okay. Imagine they want to start a new refinery and they need 60,000 crore for it. Do you think Mukesh Ambani will use his own money? You think that's the most ideal choice? Definitely not. What are the options available? Look, these are the many options available to you. Equity shares, debenture, bonds. I'm sure I don't have to explain what is these options. Equity, debenture, bonds, bank loans. You are very, very familiar with it. For foreign borrowings, you know these GDRs, Global Depository Receipts, ADRs. This is the option. Then you have ECBs, right? So these are some of the options for foreign borrowings. In fact, Reliance was the first company from India to issue GDRs or to issue GDRs in the London Stock Exchange, right? So therefore, these are the different options available for a long-term financial requirement of a company. And large company will definitely take a mix of these options. So it's totally up to them to decide which of the options they will select to undertake this new refinery project. Okay, so that's what we call as optimal capital structure. Now, this changes from company to company. It is not restricted that this is the way it is. No, every company has its own requirement, so it will change accordingly. Now, you know very well Amul. Okay, Amul is actually one brand which I will not say is a startup. Definitely, it still follows a traditional, funding system. That is, their members are, so it's owned by dairy farmers, guys. It's not owned by any government. It is owned by the dairy farmers. So members are contributing to it. It's run on retained earnings and mostly the bank loans. Okay, and of course called as cooperative finance. So it's purely run on a traditional format even today. So it does not follow the startup culture. I just thought in this entire, startup culture of startup funding, I should discuss one brand which is still doing really very well under the, the traditional style of working. Yes, amidst all this discussion, how can I not talk about Byju's? Byju's is known for its great risk that it undertook. Okay, this is this era of COVID where Mr. Ravindran Baiju, if I'm pronouncing his name correctly, he clicked like this. That was a COVID era. He launched this app and it was really successful. Early stage, he got VC funding very fast. Thanks to COVID, there was a rapid expansion, huge market. So he did heavy marketing. I don't know if you can recollect. He bought Shah Rukh Khan, SRK for the Indian marketing, and he even signed Messi. Look at the heavy marketing cost that he incurred. Huge cash burn. It was a huge cash burn. These guys don't come for free. He paid them, crores of money to, endorse Byju's. But finally, he was unable to generate sufficient profit. Huge financial difficulties. If you know, today he's in Singapore jail. Okay, nothing to make fun of, but as students of financial management, this is a lesson for us. The case study of Byju's, that raising money is very easy, but using it wisely is very difficult. You have to use it, and this is very, very good example if I'm teaching you financial planning. How you should not take risk and spoil your own money or others' money in burning for heavy marketing and not using it wisely for getting the returns back. Even now, he has not been able to pay back his investors. Okay. This case study of Tata Motors is about how to fund my working capital requirement. If you see the today's car market, huge demand for the EV cars, the electronic cars, right? And definitely in India, Tata is one of the biggest producers of, or rather I would say the manufacturers of electronic cars. So we see a lot of versions or a lot of models of electric cars. So they definitely need money to manufacture cars. And so what are the options available to them? They are definitely one of the well settled companies when it comes to financial market, and they don't have to follow the startup culture. So what are the options available to them? Like I told you, they can avail a working capital loan. They can take a cash credit. What is a cash credit? Is again a loan taken from the banks to fund your working capital requirement, either by pledging your stock, inventory, and things like that. So you pledge your own stock and take cash credit. Okay, commercial paper, again, this is a concept. It's nothing but a promissory note which is endorsed from one party to another. Okay, so debentures, foreign currency loans. So these are the different options available for Tata Motors if they are in need for financing their working capital. See, till now we were talking about long-term requirement funding. Working capital is equally important. So you should also be able to know what are the options available if today I want working capital funding, right? So remember, working capital is not equal to long-term finance. So you can't go to a venture capital firm and say, I want money to run my business or for my working capital requirement. He will say, bye-bye. So remember, working capital is not equal to your long-term finance. So yes, I hope I made this chapter more interesting and more practical to you by discussing a lot of practical scenarios before you. Do let me know in the comment section that you like this video, or if I have to get more such practical examples to make theory aspect more interesting for you. Because if you are able to relate these theoretical concepts to the practical world, things will be very different. You will understand financial management very well. Yes, that's it for this video now. Thank you so much. Do comment below and share this video as much as possible. Thank you.